This video will make you feel like an expert in the end. This is the third installment of the Cashflow series where we explain how to prepare the Cashflow Worksheet under the indirect method. After this, no more trial and error and no more guesswork when preparing the cash flows. You are watching Accounting Zero to Hero. The objective of this video is to provide guidance on how to prepare the Cashflow Worksheet under the indirect method. This type of preparation is perfect for situations in which you are a professional and you need to find a systematic way of presenting your cash flows for further review. You can utilize Microsoft Excel or other equivalent worksheet applications to prepare the cash flows, and when you are not very familiar with the company you are preparing the cash flows for, since we will do it in the most systematic way possible. The first sections of the video recap some details about the cash flow series, especially about the indirect method. If you would like to skip straight to the action, refer to our timestamps in the description. If you can recall, the videos in this series will be shown in the following structure. First, the theoretical basis of the cash flow preparation. After the theoretical basis, we move on to the practical applications. This is further split into two, the indirect method and the direct method. To give you more options on how to prepare the cash flows, each method is further divided into two. The traditional direct method, which was part 2 of the series, the indirect method using the cash flow worksheet, which is this video, the manual direct method, and lastly, the direct method using the cash flow worksheet. Both of this will be discussed in future videos. Let's formally start the discussion with a recap of the indirect method. It is important to emphasize here that the indirect method pertains only to the operating activities. There are no such alternative methods for investing and financing activities. Some parts of this section have been taken directly from the previous video on cash flow introduction. If you want to see that full video, the link is in the description. The first important thing to remember is that the most common way of preparing cash flows under the indirect method adjusts the reported profit or loss for the effects of changes in inventories and operating receivables and payables during the period, non-cash items such as depreciation, provisions, deferred taxes, unrealized foreign currency gains and losses, and undistributed profits of associates, and all other items for which the cash effects are investing or financing cash flows. Another thing to remember is that the reconciliation should start either with profit or loss before tax or profit or loss after tax. Any other basis such as EBITDA, EBIT, or profit or loss excluding NCI does not meet the requirements of the standard. Let's now move into the heart of the discussion. All the cash flow examples that we will discuss will be coming from a single dataset that we have prepared. This is to emphasize how all of these ways of preparing the cash flows will result in the same cash flow data in the end. We will be working with three particular tabs. The first one shows the balance sheet of AZH Company Limited for 20x2, which is the current year, and 20x1, which is the previous year. We also have the income statement of the company for the current year, and some additional relevant information about the current year transactions. In particular, a piece of land costing $25,000 was sold for $35,000 in cash, resulting to a $10,000 gain. Plant assets or property, plant, and equipment costing $50,000 was purchased by issuing a long-term notes payable, meaning it was not paid in cash. A portion of this notes payable were paid before year-end. AZH Company borrowed an additional $100,000 from the bank. Dividends of $218,000 were paid to shareholders. The company issued $5,000 worth of common stock for cash during the year. And lastly, the associate or investment in associate that we see in the balance sheet is 30% owned. During the current year, it generated profits of $100,000 and declared total dividends of $50,000. The second tab shows the general ledger of the company during the year. In particular, it shows all of the journal entries from January up to the last journal entry entered by the company in December of the current year. And lastly, the last tab shows the cash book or the bank statement of the company during the year. As a way of checking, the beginning balance of 255,000 and the ending balance of 350,000 agrees to the cash balance in the balance sheet that we have shown previously. All of these videos will be using these data in varying amounts depending on what type of cash flow preparation we have chosen. This means that these 3 tabs may not entirely be relevant for a particular problem. To obtain this specific file, you may email us at contactus@accountingzerotohero.com. Otherwise, you may follow the discussion and apply the concepts to the specific problem that you are currently working on. Let's go! The most important thing that you need to know about the cash flows is that technically, it is actually just the movements of assets and liabilities in your balance sheet. And this is how we are going to create the cash flow worksheet. You have to follow a few steps in order to do it properly, and you have to follow it and trust us that each and every steps here you have to be able to replicate them on your own. So step 1, prepare the cash flow tab. The cash flow tab is the tab that we have prepared right here. You have to do the following steps in preparing the cash flow tab. Number 1, lay out the cash flow template to the left. We have used the standard template that we have used for all the other videos so that we can compare the results in using the cash flow worksheet, the traditional worksheet, direct method, indirect method, and you will see that no matter what method you're using, you will be arriving at the same cash flow data in the end. In the upper section, we will lay out the balance sheet of the companies for the current year and the previous year. This is the previous year, this is the current year. And as I have said before, the movements in assets and liabilities will be used to determine the cash flow data in the end. Therefore, what we actually need, that's why we laid out the assets and liabilities or the balance sheets for comparative periods of current year and previous year, is to determine the cash flow movements. One thing to remember here is that when you're laying out the cash flows, make sure that the balance sheet is actually balancing. We have achieved that by putting a check right here. We have a check of all of the assets and liabilities if it is summing up to 0. Of course, here we have inputted the liabilities, equity, and contra asset accounts as negative and the assets as positive so that we can easier check. In this current format that the assets are positive and the liabilities and contra assets and equity are negative, please ensure that the movements are inputted as current year minus prior year. If you do not do this, you may have to adjust your cash flow signs later, because in this way, current year minus prior year, this will ensure that the signs in your movements are already in line with the signs that are already supposed to be appearing in your cash flows. The last thing that you have to do in step 1 in preparing the cash flow tab is actually the most important part, and this will ensure that you can do your cash flows as systematically as possible without trial and error and without guesswork. You have to input the totals for each column in the balance sheet that you have inputted. The totals should come from the movement because we are trying to allocate the movement and then adding up all of the space in between. We will be explaining what is this space in step 2 later and why we are adding all of this right here. And the last thing that you need to add is the checks. You always have to ensure that the cash in the balance sheet is equal to the ending cash balance of your cash flows. And here, as you can see, we have inputted a check so that we can always see that that is the case. But you have to take note that even at the start of your cash flow process, you're already balancing because we are already anticipating the net cash movement through the formula. For here, we achieve that by adding all of the movements of the assets and liabilities excluding the cash account and including it in the net cash movement formula. Because here, what we will do is that as soon as we allocate the assets and liabilities and equity movement, we will pick up all of those movements from the operating activities, investing activities, and financing activities plus all of the other movements that we have not yet allocated in the balance sheet. And that will tie up to the net cash movement of 95,000, which is also the net cash movement in our balance sheet. So in all cases, in all times, your cash flow should be balancing, which is very unlike the traditional indirect method, wherein you will only know if the cash is balancing if you are already at the end of the process, which is not a very good practice for me, because you might end up looking for differences that is very hard to find since you are trying to select the information as you go along. And that is step 1. For step 2, you need to know the parts of the worksheet tab. I separated this because I wanted to explain in more detail all of the sections that we have inputted in the first step. For this section, you have to bear with me because it will be a little bit technical, but everything will make sense in the end. The worksheet has 6 sections. The first section is the comparative balance sheet. This is where we have inputted the comparative balance sheet information for the prior year and the current year. You will see that this section perfectly mirrors the balance sheet available, which is what we have in the problem tab. And you will also see that in this example, it is actually perfectly linked to the problem tab. One thing that you have to note is that only the balance sheet movements are relevant for the indirect method. That's why here we have copied or linked from the assets up to the retained earnings. For the problem tab, you will see this is the cash up to the retained earnings. Right now, we are ignoring the income statement. Section 2 is the increase-decrease section. This section is crucial, so I separated it. You need to determine the movements in all balance sheet accounts with the formula current year minus prior year, as I have explained a while ago. This will ensure that the signs are correct when we are actually inputting into the cash flows. Section 3 is the cash flow section, which is the one here in the left side. This is the final output that we are expecting to finish. We will populate this section later as we go along the balance sheet movements. However, note that all the amounts here are just the sum of the sections from the right. We are not inputting any information directly, but they are coming from the right that I am highlighting. Section 4, movements to allocate section, which is right here. This section is simply the increase-decrease section and all the allocations in between. So as what I have said, it is the increase-decrease section, this one, and all of the allocations in between. That's why we have separated them as the movements to allocate section. It is called that way because they are the remaining movements that you need to allocate. This should be 0 in the end. The way to make them 0 is through the next section, which is the allocation section. This section will provide us with the way to reallocate the increase or decrease into the appropriate line of the statement of cash flows. It works this way. For example, we know that the common stock increased from 15,000 to 20,000. 15,000 is the prior year, 20,000 is the current year. And we know that this 5,000 is coming from the shareholders because they have invested additional 5,000 into the business. We will allocate them normally, so you can link it to the supporting documents, but for now, we will allocate this to the same 5,000 amount. You will see that through this allocation, we have canceled out the 5,000 movement as a cash flow from financing activities. We have made out the 0 as the goals, and now it is automatically populated as the proceeds from issuance of common stock. So that is the allocation section. And the overall checks section is this, which I have already explained before. Notice that when I have inputted the 5,000, nothing actually has changed in the overall check section. It is still 0 because it is picking up before that there's 95,000 of movement that are still to allocate. But when I inputted the 5,000 of common stock movement, we now have 5,000 coming from the financing activities and 90,000 remaining movement from the other sections of the balance sheet. Now that you know what are the parts of the worksheet, you should be able to design your own worksheet to apply to your specific needs. Note that this type of format is only specific to the problem that we have right now because each company has a different balance sheet, current assets, current liabilities. So you cannot really copy paste this exact format to all of the companies that you're working with. But all of the formulas here, all of the way it is designed, current year minus previous year, all of these formulas, they should all still be applicable, but you always have to redesign it to fit your own purpose. Now we go to step 3. Step 3 is to internalize the cash flow worksheet goals. I always need to emphasize this part. Our goal in the statement of cash flows is to reallocate all the increase or decreases in the assets, liabilities, and equity, excluding the cash part, the 95,000 in cash, into zero. And we do that by using the this reallocation section. As long as the sums below are not yet zero, it means that your work is not yet done. What does this mean? This means that you need to analyze each increase or decrease as to their nature using all the data that you can get. For example, you can dig deeper into the GLs or the general ledgers, you can check the cash books, you can inquire from the appropriate department in the company, or if you are an outsourced accountant, you can inquire from the client. So you have to understand what is the movement that you are looking at in order to be able to allocate the movements in the balance sheet. It's not going to be straightforward or easy, unlike, for example, this common stock when it's just one transaction. You always have to check the underlying transactions that resulted to the movements. This brings me to step 4. You have to know the parts of the balance sheet and their impact to the cash flow. This is actually one of the most important things that you have to remember so that you already have a guide on how to look at the movements. This will give you a rough idea what to do when you are stuck. Based on the definitions of the different cash flow activities, the movements in current assets and current liabilities are normally operating activities. Movements in long-term assets or the non-current assets, they are normally classified as investing activities. Because, come to think of it, if there is a movement in a non-current asset or a long-term asset, it means that there is an additional investment that is made by the company. Non-current liabilities and equity are normally classified as financing activities. Because non-current liabilities like bank loans, long-term loans, and equity items such as common stock, they are normally movements related to the financing of the business or where the company is getting money to finance the operations. So again, current assets and current liabilities are normally operating, non-current assets are normally investing, and non-current liabilities plus equity are normally financing activities. I always say normally because there will always be some exceptions. For example, in the retained earnings, we will have some movements related to the net income during the year, which is technically under the operating section. But all the other movements in the retained earnings can be classified as financing depending upon the nature. Knowing all these basic things will go a long way for you in allocating the movements because you will already have a guide on what to do when you see a movement and you are not very sure where to put it. So you already have an idea what is going to happen. Step 5 is to start allocating the balance sheet movements. So this is where the fun begins, and this is where you will see the magic of the worksheet approach in preparing the statement of cash flows under the indirect method. I normally start with the easiest accounts to allocate. For example, let's start with the operating activities, current assets and current liabilities. You will notice that in the traditional indirect method, we use this last because these are normally the assets and liabilities that you did not consider in the other allocations, in the other cash flow lines, but now we will put them last. Since we don't have any other information about the accounts receivables, we will input them as increase decrease in current assets. The prepaid insurance as well as the inventory. And related to the current liabilities, we don't have any further information about the type of movements of the 60,000. So we're going to assume that these are all current liability movements, and including the salaries payable. You will see that after we have allocated the current assets and current liabilities, we already have a lot of sections that are already zero, which means that technically you're already done on those columns and you have already allocated them, unless you get some more information about these movements based on your further understanding of all the other transactions. I don't follow any rules whether go left to right or right to left, but I normally check on which ones I would have more information on so that I can do the easiest ones first. For example, in the retained earnings section, we know that we have this 93,500 is composed of two movements. Number one is the net income during the year, which is 124,500, because we are already using profits after tax. And you see that after we allocated the 93,500, part of it is the net income, we have a remaining 218,000. And you can remember that 218,000 is actually the dividends that were paid during the year to the shareholders. And now you can allocate negative 218,000 to cancel out the whole movement, and now it automatically goes to dividends declared and paid to shareholders. And now we also know from the additional information that bank borrowings were additionally acquired for 100,000. It is coming from the problem tab, letter C. AZH company borrowed an additional $100,000 from the bank. So now we have to input a positive 100,000 to cancel out the movement. You will see that now, with the goal of making all of this zero, we're making very good progress. And the cash is still balancing, because as of now, we have allocated already 113,000 of movement, and we have net 35,000 of movement coming from all of the other balances. Let's check something next. Let's start with the notes payable, maybe. Notes payable has a movement of 30,000. However, we know that the notes payable movement is related to the plant assets movement of 50,000. How did I know? In the problem tab, we have said that plant assets costing 50,000 was purchased by issuing long-term notes payable. A portion of the notes payable were paid before year end. Here, we can already input that here. We have increased the plant assets through a notes payable. So initially, before the payment, we have a 50,000 note payable that was supposed to be cash flows from financing activities. However, we know that out of that 50,000, we did not actually pay all of them. We only paid a portion of it. So now that portion that was missing is 20,000, because now we have seen that it increased by 30,000. Out of this 50K, 30,000 remained. So here we input a positive of 30,000 to cancel the movement. And here you will see that a repayment of note payable of 20,000 was made. You can verify this by checking the cash book, for example. Here you see that there is a repayment of 20,000 of notes payable going into the bank. So next, we can maybe check the accumulated depreciation. The accumulated depreciation increased by 20,000 during the year, which, as you will notice, is actually just equal to the depreciation expense. We can cancel out this movement by inputting a positive 20,000. So now it goes automatically to the depreciation expense line because of the formula. We can check land next. For the land, we know that we received 35,000 for a land that is costing 25,000. So here, in the cash flow, For investing activities, we have proceeds from the sale of land of 35,000 because we have received cash, and now you see that there is a 10,000 of difference that is yet to be allocated. If that looks very familiar to you, it's because it is actually the gain on sale of land of 10,000 in the income statement. So now we have to input negative 10,000 to cancel out the movement. We'll do the investment associate last because that is much more complicated. We will do the interest payable for now. In the interest payable, it increased by 5,000. However, it is composed of two movements. We have an interest expense that is in the income statement right now. Interest expense, which is this 15,000, and it should be actually negative. It should be positive because we're adding back the interest expense. And we know that the remaining 10,000 will actually be the interest paid during the year. And for the income tax payable, it increased by 20,000, which is composed of the income tax expense that we have in the income statement. And the net movement that we have to allocate still is 10,000, which we already know from the part 2 that it is the tax paid during the year. You see that was very fast, and now we only have to do the investment in associate. The investment in associate increased by 15,000 during the year. This is composed of the share of profits of an associate, which is 30,000. The remaining of the 15,000 movement after we have already accounted for the share of profits of an associate is coming from this letter F right here, wherein they declared total of 50,000 at 30% ownership, which is 15,000 cash received as dividends. So here we have a positive 15,000 because we have received that cash. So now you will see that there is no more remaining movements to allocate, and you will see that every time we inputted a number, it is still balancing in the overall check. That is your indication that each column that you are resolving, it is always still balancing. There's no room for trial and error and no hoping that it will balance in the end, because it's always gonna be balancing. Your challenge is now to allocate the movements here so that it becomes zero in the end. Now, an important part of this discussion right now is to have a comparison between the worksheet approach and the traditional approach, and whether there are any differences in the final output. This part right here is the cash flow that we have prepared using the Cashflow Worksheet, and now I am shifting to the cash flow using the traditional indirect method. You will see that there is practically no difference in the two cash flows in terms of the ending output, because technically you shouldn't have any differences at all. You only have one cash flow in the end, but you are shifting your thinking from the normal cash flow preparation in the traditional method into thinking that the cash flows are actually a function of all of the assets, liabilities, and equity movements, which makes it really easier to digest and systematic to prepare. This takes a lot of time to practice and to get used to. However, you always have to remember these things right here so that you can always have a guide when you are stuck. Last few advice: if you don't know the nature of the movements that you have, always go into the GL. Always go into the financial statement disclosures. You may find more information about the movements right there, because if you already have the financial statement disclosures for some of the items in the balance sheet, you'll also have actually roll forward of them in the disclosures as well, so it will give you more idea as to the movements. I hope you find this video super helpful. Remember that you can use the Cashflow Worksheet approach on instances when the use of Excel is permitted, like in actual professional work. This sure saved me a lot of headache. See you in the future installments of this series. We will discuss the direct method next.